Hello, good afternoon. Sage here reporting live from Kalkine Studio. It's lunchtime here in Sydney and time for the Mid-Market Pulse. So in today's show we'll take a look over the Australian share market's performance by the mid-session trade. And without any further delays, let's get started. The Australian shares were trading near day's high by mid-session on Friday, supported by the broad-based buying across the sectors. The market sentiment was also lifted by a rally in the blue chip miners such as BHP Group, Rio Tinto, Fortescue and Mineral Resources, which surged higher iron ore and copper prices. And by the afternoon's trade, the ASX 200 index was up by 69.40 points or 0.94%. And earlier today, the benchmark index opened higher, snapping the four-session losing streak, tracking the mixed cues from Wall Street. And on the sectoral front, 9 of the 11 sectors were trading higher, barring the healthcare and A-REITs. Materials sector was the biggest gainer, rising as much as 2.9% due to a rebound in the metal prices after China's Evergrande Group averted a destabling default. And consumer staples, energy and tech sectors also witnessed a surge in buying, with each index rising over 1%. Among others, telecom, utilities and consumer discretionary sectors also traded higher, with modest gains. And meanwhile, the healthcare and A-REITs were among the worst performers, trading marginally lower. And let's now focus on the top gainers and losers by the mid-session trade. And the biggest gainer on the ASX pack was the Iron Ore Explorer, Champion Iron, which traded higher by 5.4%. Some of the other notable gainers were Australian law firm Omni Bridgeway and miner giants Fortescue Metals Group, Rio Tinto and Gold Road Resources. On the flip side, automotive retail group Eagers Automotive was the worst performer with a 2.9% loss. And the other top losers were aerial imagery technology company Nearmap, healthcare businesses Ansell, Fisher & Paykel and ResMed. On this note, let's now move on to the stocks that created a buzz on the ASX today. And shares of media company HT&E jumped over 6% after it unveiled plans to create radio networks by acquiring Grant Broadcasters' radio and digital operations for 307.5 million Australian dollars. The company has inked the binding agreement through its subsidiary Australian Radio Network, and the deal will see the creation of a national radio broadcast network with 58 stations, 46 DAB plus stations across 33 markets. The deal will be funded through its existing cash reserves, financing facilities and the issuance of HT&E shares. Grant Broadcasters is family owned and the leading regional radio broadcaster in Australia. ARN is the number one metropolitan radio broadcaster in the country. And shares of BHP Group surged over 4% owing to a rebound in the prices of the commodities. And in a separate development, the mining giant's chairman Ken MacKenzie has not ruled out shutting down its Mount Arthur coal mine in New South Wales if no buyer can be found for the mining giant's last thermal coal mine. And speaking at the annual general meeting today, Mr MacKenzie said current high coal prices had not shifted the company's view about the attractiveness of coal for power stations. However, with no news of potential buyers, when asked if the company would consider shutting down the operation instead of selling it, Mr MacKenzie said, "We remain open to all options." And the miner sold its Colombian thermal coal interests mid-year, leaving the wholly owned Mount Arthur open cut mine in New South Wales to be sold within a year to meet its target to exit the commodity. And media company Nine Entertainment shares continued gaining streaks for the second day on earnings optimism. And speaking at the company's annual general meeting on Wednesday, CEO Mike Sneesby said the company is on track to report 10% growth in profit during the first half of the 2022 financials year compared to the corresponding period last year. And EBITDA is also expected to be rising by 10% compared to the first half of the prior financial year. And Sneesby further stated that the publishing business is on track to deliver 40 to 50 million Australian dollars in EBITDA for the full financial year, an increase on prior guidance of 30 to 40 million Australian dollars. Shares of Link Administration climbed 3.5% after it received an $86.5 million Australian dollar takeover offer for its banking and credit management business. A syndicate led by Pepper European Servicing has offered a conditional, non-binding indicative proposal to acquire Link Group's banking and credit management business. The proposal is subject to due diligence and other conditions, including securing debt financing. The Link Group board will consider the proposal, including obtaining advice from its financials, legals and tax advisors. And the Australian Healthcare Fund, NIB holdings, dropped nearly 1% after it announced resumption of travel insurance sales. The company said in an exchange filing this morning that travel insurance sales to Australian and New Zealand residents will resume this month after securing a new underwriting partner. NIB Travel has partnered with Pacific International Insurance to support its underwriting arrangements. And thank you for your company on that report. That's a wrap in today's show, but keep watching Kalkine TV for more of the trending market updates from Australia and around the world. Sage signing off.